Hi, I'm Chris Reed, Managing Director and Chief Executive Officer of Neometals.
Hello.
Welcome to our headquarters.
Very nice, actually. Very nice. You don't waste shareholder money here, do you?
No.
It's about bear, everyone. It's a bear around us. And we're going to say unusual format today, given I'm from all the way to past. I've got to see you. I'd love to find out what's going on. I think there's a few sort of, I guess, conversations going on in the market about, how things were going towards the end of last year and what you're going to be doing this year in terms of potentially delays, maybe sort of slight tweaks to some of the deliverables and timing of those deliverables, right? Maybe some misconceptions too. We're going to also do a slightly unusual format here, folks, where we're actually going to sort of drop in a few slides on the way. We're looking at a big screen over here, and which will help me understand and hopefully give people an idea of what we're going to focus on. So, without further ado, where do you want to start? Because I was saying, for me, the share price September onwards, people kind of got a little bit nervous about some delays.
Look, I think, when you're not at steady state cash flow and people can see that you've done a number of investment decisions in 2023.
Yeah.
They think, raisings are just around the corner, right? So, we saw some shorters come into the market. We've got about 20 million shares sort of short at the moment. It's sort of just under 4%.
Okay.
So, I mean, look, we're not immune to the general market malaise. But, we've got a timeline that will see us delivering real tangible catalysts this year for the ship.
Okay, because I think for me, they're sort of looking in from outside, there was obviously Europe was sort of imploding at moments last year, and this now is pretty much a European-centric, not entirely, but getting much a European-centric near-term revenue company.
Yep.
And there were potentially, delays with your partner and people trying to work out what's going on. So I kind of get the shorting component. But I think it'd be quite useful if we could sort of address, first of all, the European situation, energy costs. I imagine a bit thrown at you every time I speak to people. Yep. Are you still comfortable working in Europe?
Oh, look, absolutely. It's the only place to really start for us. If you have a look at the volume of cells and the volume of EVs, the penetration rates in Europe, the number of cells that are in Europe and in these cars and how they're growing, and then how their domestic production of cells is increasing. So, we forecast that Europe's the second largest market outside of China's obviously the largest, and North America would be third at this stage in terms of volume.
Okay, but what I guess what I'm trying to address is, do you think people are selling your business? Because it's always been hard to value your business because of the one, multiple projects, but two, there's no really comps out there per se. So for instance, look at the recycling bit. It's easy to say, we're like a recycling business, but what would you say, what business would you say you're in? What problem are you solving?
Yeah, so look, Neometals, the three core businesses are all around green processing technologies that produce battery materials. And we're commercialising those with partners. So that's Neometals. If we dive then into Primobius is providing recycling solutions for the cell makers and the car makers.
Okay.
Recycling now, for a number of reasons, is very, very attractive. Whether you're closing the loop, secure supply chains, reducing your carbon footprint, but the overarching thematic is it's compulsory.
Right.
So it's an obligation on the car makers and cell makers to recycle their own products.
Right.
So, we developed a flow sheet that will recycle these batteries. It'll produce green battery materials, high purity, low carbon footprint, lowest point on the cost curves for these products. And they want this stuff back. So, we have flexible business model. So we've got a process, we've got a partner that builds plants. So that's the actual plant solution. How they choose to do it, well, they've got increasing volumes, right, of materials that will be coming back. And so at the moment we are a fully licensed waste disposal company that can handle these lithium batteries safely in Germany, which is pretty much, the highest bar in the world.
Okay, but there's a few things going on there, right? So EU is sort of, it's kind of a nascent industry, right? So the whole kind of ecosystem for OEMs, EVs, battery manufacturers are included in that, is it's nascent. They're kind of learning as they go along. Yeah, I noticed that some of the targets are evolving and changing, which why I guess must be make this a little bit difficult for you. Yeah, no, because you're chasing different endpoints, aren't you?
Well, I think, look, you have a look in Europe and the the EU, the different environment ministers that comprise the EU have agreed on what those targets are.
Okay.
And, from what we achieved at the pilot plant to demoing that continuously, and then these new EU battery regulations, we pretty much, if you look at nickel and cobalt and lithium, so nickel and cobalt, you've got to hit 90% overall recovery by 2026.
Okay.
You've got to hit 95% recovery for nickel and cobalt by 2030. Lithium goes from 35 to 75. Now, our solution, the technology, the flow sheet, we're not quite there, but I believe that we're probably in front of just about everyone we know. So our aim is to be the first that is fully compliant with the EU battery regs. So the goalposts have moved, and that will deliver a better product for the customers.
Right. Okay, so that's a problem solving for them, and as I say, it's legally binding or obligatory or mandatory, however you want to frame it.
Absolutely. So that's on us. So we have to make our plant capable of achieving those recoveries, so that the plants that we either operate and provide a service, or we joint venture with license, and supply, have to be compliant. Right. That's
easy. Okay, given that's the problem solving for them, and given they're obliged to actually deliver, you need to deliver, right? It's kind of black and white. So it's either you do deliver or you don't deliver. Is that the scenario we're in?
And yeah, we have what we term internally product readiness. So product readiness for us is when we're ready to contract to supply the plant. So that's coming at us pretty quickly. So for Mercedes-Benz this quarter, we will reach product readiness for the 10-ton spoke.
Right.
Offer them a contract and execute it. Then early next quarter for the 10-ton hydromet plant for Mercedes-Benz as part of our cooperation agreement. Then later in the June quarter, once we finish our engineering cost study, we will then offer Stelco a brace,
because they're absolutely,
for a 50-ton spoke and hub. And then at that catalyst, we've got then a 30-day option to buy into that joint venture with Stelco, for a cap of $1.5 million.
So but all of that is assuming that you can hit these new targets, this moving target. It's pretty common.
Well, the targets are you've got to achieve by 2026. Yes, if we had a look, a slide here at where we're at. So, at our current TRL, we're at about 87 for copper. We're almost 84 plus for nickel, 82 for cobalt, and we're 83 for lithium. The reason the lithium requirement is the lowest here is because it's the most difficult to get out. But we have actually two IP or two flow sheets, one to recover lithium from the wash water in the front part of the plant, the other one to recover lithium out of the hydromet section. So that's great. So we're future-proofed on the hardest one, which is lithium.
Because the target recovery rate for that
had been moved
to 75.
To 75.
Okay, so you tick that box, we're green, ready to go on that one. So it's the other three that you need to kind of move by how much?
So you're looking at moving them each, probably 6 or 7%.
Okay. And you got 2 years to do that.
2026. So yeah, look, you've got a little while to do it, but we want to tick that off
really soon.
Yeah, next 5 or 6 months. So hence why we're on those trials.
You don't get worried about it.
No one's worried about it. You just have to.
You might be if you didn't think you could. How much of worried about them in that case?
It's theoretically possible.
Right.
So with the recoveries you get from the back end, so most of the innovation that we would have left is actually in the front end. So the back end recoveries are pretty much Mickey Mouse. So at the front end where you shred it up, so when you get the plastic, the copper foil, the aluminium foil, you're getting little bits of cathode still stuck on them. Right, so what we're doing is we're adding friction washing to try to rub it off, so that it goes into the leach solution. Because if you don't pick it up in the front end, you can't invent it in the back end.
Okay,
right. So that's where we've just got to tweak that a bit, and the back end works beautifully.
So, right, okay, given you're not concerned, and then it's down to you to, say to the market, here's how we're going to do it, or here's we've done it.
You're going to have third-party validation.
Right.
So contracting with Mercedes-Benz.
Well, what comes out? So I want to compartmentalize this, because this if you can just tick these things off, then people get very comfortable with it. Okay.
Yeah.
So you've got it on the lithium, and then with the other three, you're close and you're not too worried about it, right?
Yeah.
So that's the technical aspect, and then I'm sort of so glib about this one, but with scaling up, that's the kind of the easy bit in a way. Ask more.
We're scaling up at very manageable scale up.
Yeah.
So from 1 ton to 10 ton to 50 tons.
Yeah.
Eventually we'll get to 500.
Exactly. And because technically you cracked it, right? At that point, technically you cracked it. So of course the capital's available, and of course it's kind of easy.
And you'll get economies of scale as you scale up.
So that's the EU changing, moving the goalposts for you during this period, because it's a slight changes or delays to what you thought the process might be. Then you've got Mercedes-Benz. So good news, Mercedes-Benz is a partner, not someone you want to sell to, but they're already working with you. Have they made changes or requests to the process as well?
Yeah, well, look, one of them was certainly in the front part of the plant where we have the discharging and disassembly section.
Right.
And that's really to account for more modules coming back than cells. So generally when they make, so first of all, you got to make the cells that go into the cars, right? They're smaller.
Yeah.
Right. Then you put them into the modules or packs and they go into the car. So yeah, as they make the cells, you get production scrap, which we sort of modeled at about 10%. Right. But history showing that it's actually higher than that. We hadn't thought that we needed to get onto the modules for a little while, right? But Mercedes asked us in the scope of the plant that we want to supply, we needed discharging and disassembly, right? For whole modules, these things are pretty big. They're like a big coffin, right? So we've had to adapt, we've had to discharge them, disassemble them, and make them safe to shred. So that necessitated a bit of a delay, but that's what the customer wants. And that's fantastic, because at our Hilkenbach operation, 70% of the feed that we get at Hilkenbach are modules. Now, statistically, that shouldn't happen for years, but for whatever reason, they're either failing when they put them into the final test of the car before it dries off,
right?
Or there's car crashes. So generally what happens now, if there's a car crash, the pyrotechnic fuses go off, right? And the car, or the battery at the very least, is...
So yeah, so what I'm hearing there is potentially there's increase in, slightly in the process, but and therefore time impact you in terms of time, but yeah, also cost increase.
Yeah, correct. I mean, you've got inflation globally.
Yeah.
So there've been cost increases, but then having to increase your recoveries at the same time that lithium prices have gone up, nickel prices stay up, the cobalt prices are a little bit soft. So when we have a look at the rate of change, the delta, in terms of our revenue growth from what we put into the markets previously, so that's essentially, we assume a certain type of cathode, what it contains, multiply our recoveries, and then multiply it by the market prices.
Can I keep it very simple, folks? Listen here. Increased costs, are they offset by increased recoveries? Yeah.
Multiple.
So actually there's a net gain as a result. Okay, so that's the good news bit, right?
Absolutely.
Fantastic. And obviously then scaling up brings a whole new different quantum to that. There's a kind of really big...
Yeah, and when you think of it,
okay,
you're growing a technology tree there. So you've got the 10 ton, then the 50 ton, and then the 500 in terms of how you're going to grow. And then SMS want to build plants, and they want to build more plants, and they want to build bigger plants. So hence why our flexible business models are all around increasing the volume for what...
And of course you've got the C's, right? Because if you're looking, if I'm looking at, and like maybe it's not something that you need to talk about, but if I look at one of your competitors, recently having to do a deal, which perhaps are going to deal with the devil in a way, in the sense that they're kind of maybe giving away a whole bunch of the upside as a result of not being able to get the feed now.
So yeah, it's a different approach.
Yeah.
So, essentially we sit down with the car makers and cell makers and work out the volumes that they think over time. You get a high and a low sort of case. Then we map out what size plants, this spoke, this hub, the bigger spoke, more spokes, a centralized hub. we model that out. We give them a CapEx. We give them the NPV and say, well, how do you want to do this? So at the moment, you're sort of buying cells and making your own modules and putting them into your cars. You're not getting that much scrap. You're getting mainly modules back. For small volumes, we can do that for a fee, right? So all the capital's on our books. As you then, as a car maker, want to produce your own cells, and they all want to do that. They've all now, a lot of the European guys have announced that we would like to put dedicated plants next to the cell making because you've got a really constant fee. As one was really high grade. We're prepared to share the economics. And then when you get to the largest volume, you got to remember, so the recycling is a new impost on the car makers. It is a new cost. So we have to give them a pathway to the lowest total cost of recycling. Ultimately, for the really, really big plants, right, where we don't want to tie up billions of dollars in working capital for these things, we will plant, supply, and license in the technology.
Okay, that's really. I mean, so what's the redundancy or the rejection rate of batteries? Because if you're going to park up right next door to where they're making the batteries, there's getting smart, the infrastructure and transportation costs are much reduced as well. What's the kind of what do you call it? Redundancy or rejection?
Well, it's a scrap rate.
Scrap rate.
Yeah. So I mean, look.
Great battery rejection.
Look, we model our sizing. So off a 35 gigawatt gigafactory, we at a 10% scrap rate, we don't need about 50 tons a day.
Okay,
20,000 tons a year capacity. The only thing is, if we have a look at the original Tesla gigafactory, and it took Panasonic 5 years to get the scrap rate below 20%, and then various cell makers. You got to remember, the cell makers have never made batteries in these volumes before.
Yeah.
Right? I mean, it's not an easy job. Not everyone does it. Right? And there's different classes of batteries.
Yeah.
So, it's pretty difficult. So we're happy investing and sharing the economics because they've got the feed.
It's interesting, actually, because because there's a big bump at the beginning in terms of potentially as though they're learning how to make batteries or reducing.
That'll reduce it.
But what's going to have? There's a ton more batteries coming into the market because as cars come to the end of their 7-8 years of batteries enough. So it's actually kind of doesn't drop off too much after.
Absolutely. So if we have a look at this slide here, why would you scale up your demonstration plant to commercial?
Yeah.
Right? One, we built that capacity into it all the time, right? So we consciously knew we were going to do it when we built it.
Yeah.
Right? And if we have a look at in 2030, there's projected to be 600 billion euros worth of recoverable materials in the batteries. Now, to put that into gold equivalent, that's the equivalent of 300 million ounces of gold lying around, and at a grade of 4 to 5 ounces to the ton. I showed you what the
3 to 400 million.
Well, 600 billion euros. Right. And it's growing at more than 100 billion a year. Right? So
it's interesting, actually, but if I look at your company as a whole, because obviously we don't want to sort of do a 2-hour session here, although we could. Is the recycling component feels like it's more predictable in a way. I know there's been a little delay because of Mercedes and etc., but it kind of feels more predictable in a way compared to vanadium. Because vanadium is reliant on two things. It's reliant on stability around pricing, or at least predictability around pricing. Yep. And there's the RFB technology, which people have been, talking about, but there's no kind of real agreement or consensus on what those batteries look like. So there's a bunch of options, kind of VHS, the issues argument there. So I think you should change your thinking off the back of how you've evolved your company last year in terms of where you think the value is going to actually come from.
I think we've got very high conviction about the fundamentals in the core 3 processing technologies. Right. When we have a look at the batteries, more EVs, more cells, more scrap, more end of life, solution needed.
Problem solved.
We're not worried. We were never worried about the market.
Okay.
We were worried about having a solution and a partner that could build the solution and use our exclusive access to the technology to get into as many plants as we can.
You didn't think it was going to be this big, did you?
I'm pleased. I think in all fairness, the timing, all of this has come at us much quicker
Agreed.
than we thought.
Agreed.
So, we have a public pipeline and then we have a private pipeline. And so once you start to deliver into Mercedes and then Stelco, it's a cookie cutter approach. SMS can build the plants and Prime OBS then just with other joint venture partners or other plant supply customers.
Nice problem to have, Chris.
It's a good problem. Look, I have no trouble with that business.
Just like
That one's fine. And a vanadium one. So you're producing the largest amount of high purity material into a market to supply to the top end. So lithium vanadium cathode chemistries, the vanadium redox flow battery electrolyte, titanium master alloys. It'd be a sin to put this into steel. But ultimately you've got the liquidity there to throw it over the fence and money come back.
Yeah.
So what you've got there is you're turning a waste product into a battery material, sequestering carbon. So the low carbon footprint's what everyone sort of needs in Scandinavia at the bottom end of the cost curve. So, I mean,
it's imagine that, right? So the carbon capture component and the carbon credit side of things, it's kind of getting people's perception of it sort of fluctuating a little.
We don't model anything in the...
That's the point.
Yeah.
Don't model anything in.
No, and we don't model anything for the byproduct, right? Which is it's a synthetic limestone that's going to go into a building product. So we don't model anything there.
That's an insane revenue line if it all comes to pass.
Yeah, so you have the technologies, you've got to do the studies to prove the attributes, qualitative and quantitative, to the customers so that we can deploy these technologies ourselves with partners or to license them. And the same with Eli. We've developed that technology with MinRes for 10 years. It will shift the cost curve of lithium production or lithium producers that choose to adopt it. I've got to prove that. So we'll have the Class 3 engineering cost study out in the June quarter. Okay, to show to people, if you use this technology, this is the CapEx, this is the OpEx. Okay, now, we could build the plant like we're going to do with Bondalti. We could toll treat for people. We could buy their intermediate and process it ourselves, right? Or for the existing producers or new producers, we could license the technology. In Europe, we have to do it exclusive.
Okay, these are options down the line. At some point, you'll decide. Do you want that revenue line? Do you want the kind of distraction of that cost of sale initially, and then eventually a revenue line, or do you need to just focus on first thing, get the economics sort of on grid number one?
Whatever the customer wants. So providing that if it's a process in technology, it is a solution. There needs to be a need. There's clearly needs, and you have to provide a solution.
Okay. So that's what Roman can tell me on that one.
So Eli would be in the June quarter.
Okay.
And you've got the battery recycling in the June quarter.
Okay. So
and the vanadium recovery feasibility study results will be out this quarter.
Okay. So I mean, there's three big techs.
Yeah.
Yeah, no, but why I think it's important for you to kind of say this is because you've got to lay some figures, because you have gone through in previously long periods of not much to say, and people's expectations now, it's kind of the rubber's hitting the road.
The rubber's always hitting the road.
I know, but like Saturn, right?
Yeah, look, I mean, for Mercedes-Benz, if they're not ready to sign the contract until this quarter, and it wasn't the December quarter as planned, what can I do?
Right.
It's not like I can't force them to sign it.
Of course not.
They only got their approval last week to start building this shed.
See, message to shareholders is what from anyone else looking in on this video?
Neometals.
Yeah.
Oh, well, look at the catalysts. I mean, it's going to be a really big year.
The next big 6 months be for sure.
Yep.
People get a better sense of the economics in terms of being able to value that.
Absolutely.
Okay. So we've focused on recycling. Perhaps we need to kind of move off that. And we kind of touched upon the vanadium component. Is there any updates from when we last spoke on vanadium?
So look, essentially trying to conclude the SSAB supply agreement for additional volumes.
Yeah.
Signing the shareholders agreement, tech license, so to actually take 50% ownership into the project.
Yeah.
Then putting out the feasibility study results based on
Do you think it's just on the money side? Because I think today's for me about
On the money side, so you've got. I mean, we're earning 50% in an incorporated joint venture.
Yep.
Is it capable of procuring its own finance? Yes. Are we running a debt financing process for that project and that project vehicle? Yes. Right. Does it have an equity requirement? If the shareholders have the option to put their own money in, or we can put third party.
And that'll be dependent on one or two routes of revenue for you, which is one, say, in the same establishment, Crown governments of good quality products, or hang around waiting for the VRFB. So, or both. What's your sort of thinking when you kind of get to the point where you say to potential funders?
Well, I mean, you've got to assume if you were going to qualify for the battery application, that it's going to take you 12 or 18 months.
Yeah.
So essentially the market price for vanadium that we put into the models is, the metals bulletin, like fast markets price.
Okay.
I mean, it's
a big project.
We put the European pricing, it's on a delivered basis into Rome.
So it's kind of irrelevant where it goes or the
play, actually, right?
Okay, so and as a big project that you're looking to kind of scale up as well, so those are kind of the two. With the kind of rest of the project, I mean, obviously slightly further out, different timing.
Again, the investment decision for Eli back half of 24.
Okay,
right. So, but the battery recycling with Stelco, it's a September quarter proposition. We have to fund the shredding spoke and our share in the shredding spoke if the board resolves to exercise. Otherwise, we get a 10% royalty off of Stelco. So agree, take equity in it, and then we have to invest our share. Look, what if we go to the market later in the year? We're looking to scale up a profitable business to invest in a spoke. It's literally twice the size of the one we've got at Hilkenbach. Like Hilkenbach's licensed to run at less than 10 tonnes a day, but can do 1 tonne an hour. So if you're going to do a 50-tonne spoke, it's only 2 of the Hilkenbach plants side by side. So very manageable technical risk. SMS have got the obligation in the shareholders agreement to procure on a best endeavours basis 50% project finance. I think we don't do our numbers around that. If they get it, that's all well and good. But yeah, essentially each investment decision in Primobius is to build another plant. So all incremental. So you're going from your 10-tonne spoke to your 50-tonne spoke, because for Mercedes, we're just giving them a license for 10 tonnes, right? Which is small. It's royalty free for them because we need to teach them how to recycle. They're going to share with us all of the latest and greatest cells and formats in chemistry.
Yeah.
We co-own improvements. It's all good. And then we talk about how we provide an industrial solution for one of the world's leading car makers. You've got Mercedes, we're processing some of their material at Hilkenbach. Then they want to switch that to their own plant. So they'll take scrap from Commence, right? And then they want to build their own cell plants. Now they're an investor in ACC, obviously, but they also want to build their own plants. Well, they're going to have a recycling solution. They're going to need 50-tonne plants. When we get to Mercedes-Benz in 2030, their goal is to have 200 gigawatt hours of cell making capacity, right? That's 900,000 tonnes of batteries a year, right? So they're going to need 500 tonne a day plants at some stage next decade.
5 times 500, you say?
5 times 500 tonnes. And we're looking at when they just make the cells that you would need 550 tonnes.
Things so really need.
I mean, we're the only recycler with a cooperation agreement.
Okay,
like that.
So if only Eddie was saying just had that one aspect to it,
yeah,
I'd be pretty excited. But obviously you've got a lot else going on here at the moment. But you're full bore here. So again, if I could just a message to show, because if I'm looking at behaviour of your stock last year, you hit some dizzy heights on a couple of occasions.
Yep.
Last year, and then it's kind of come off towards the end of the year. Like most equities did, as it was kind of risk off environment. But I wouldn't have expected to have seen that, given some of the messaging in it. But you did kind of go quiet for a bit. Your message to shareholders about this year is, it's exciting.
Well, there are catalysts. I mean,
catalysts are many.
You'll have all the tools to value the 3 core businesses.
At last,
you will have clarity on what our strategy is for the remaining mining business.
Yeah.
We've shown a propensity to demerge and distribute them back to our shareholders to keep up our reputation of making money and sharing it with the shareholders. Right? So, ultimately, like the vanadium one, it may have a life as a separate listed entity. It might be private and might have new capital put in it, but we have the optionality to do that. And you're like, so how we structure all of our businesses is they all sit in special purpose vehicles.
I didn't ask you, how's your other spin out doing?
Which nickel?
Yeah.
Which is going all right. I think underappreciated. They've got a nickel mine that I think they'll make a decision on towards the end of the year to put that into production.
Yeah.
And they've got some fantastic lithium prospectivity. It sort of made us look a bit silly, but
yeah,
that's
still on it. You still have a fish.
Yeah, look, it was a great, and we've given it back to the shareholders. So the Neometals shareholders, if they still hold their shares, if they still own the asset, they've done pretty well.
I mean, lithium last year in Australia, nuts.
Yeah, well, they've found lithium.
Yeah,
right. There's some oxidized stuff at the top, but that's okay. It's on granite mining leases. And it's got the national highway and rail running through it, connecting it to a port. I'm sitting there going, I have a look at a lot of these other guys, and they've got lithium-ion exploration licenses. And then you have to, one, prove you've got enough, prove it's economic, put down a mining lease, negotiate with the First Nations people.
Yeah.
That process, I've done it, I've been here 21 years, I've done that plenty of times, right? They're not certain and one-way streets. So to be on a predative title granted mining lease with access to infrastructure to get you down to the port, right? So you can be, if you were 50 or 100 kilometres away from where that is, further into the bush, you could double your operating costs.
Yeah, I've seen a few, I think, companies recently, I'll say. Don't put a date on it.
So whenever they find, they can get that into, it's a bit like Widgie. I mean, you've got a nickel concentrator that's underutilised for BHP Billiton. And you've got, in terms of lithium concentrators, you've got Mount Marion, Bald Hill, I'm not saying they'll sell the ore to them or whatever. I don't know what they're doing. We don't have any control over it. But, if it's there, they have the shortest path to commercialise it.
Yeah, I think that was worked out well. Well, Chris, let's wrap it up because we've got a lot there.
Oh, Joe, it's good to see you down under for once. You sort of tan and everything.
Skin cancer on its way.
After plates, this round the way up.